If you're not happy with your stocks and shares ISA provider, perhaps their fees are too high or their support's not very good, then don't worry. It's very easy to switch, but you have to follow the right process. So what I'm going to show you is how to do that step by step and show you my process of moving from Nutmeg to Vanguard. So let's look at that in a bit more detail. Remember, this is not a recommendation. If you want advice tailored to your specific circumstances, seek independent financial advice. This video is about ISAs, which are individual savings accounts. You can think of an ISA as a tax invisibility cloak, which makes your money invisible to the taxman. If you hold a stock outside an ISA and you make a capital gain by buying low and selling high, then you'd incur capital gains tax. And if your investments generated dividend income, you'd have to pay income tax. But if your investment's held inside an ISA, you won't pay capital gains tax and you won't pay income tax. And I believe the spell in Harry Potter would be Evanesco. Now there's a right way to do this transfer and a wrong way. Here's your blue ISA invisibility cloak, and the account we're moving from I'm going to call the source ISA, because that's the source of your money, and we're moving away from that account. And in this example I've shown it holds two funds, one which contains 45k and one which contains 15k. And those have been accumulated from your previous year's ISA allowances. And the account we're moving into I'll call the target ISA. Now the correct process is to trigger the process in the target ISA, which means that it's all handled by your target ISA provider, and they'll do all the heavy lifting for you. What you mustn't do is to sell the assets in your source ISA and then transfer that cash into your bank account. If you do that, it'll lose its ISA invisibility, and you'll lose the ISA protection for all those accumulated amounts that you've put in the past. So the key thing is to keep the money in your source ISA until your target ISA handles the transfer for you. One of the things you have to consider is whether you want to transfer your ISA in the form of assets or to sell the assets and transfer the cash. And if we want to revert back to our Hogwarts Latin, we'd say that's an in specie transfer. And here are the fees that you'd pay if you transfer in the form of cash. Even though it seems ludicrous, some ISA providers charge you an exit fee, and some providers charge an entry fee. If you have to sell your assets before transferring them as cash, some platforms will charge you for that transaction. And then once your cash has moved onto your target platform, you'll have to purchase the assets again, and that may incur taxes and it may incur trading costs. If you transfer in specie in the form of assets, you may still have to pay an exit fee and an entry fee, and many providers will make you pay a transfer fee to move the asset from their platform to somebody else's platform. Once you've decided whether you want to move assets directly or to move cash, the process is actually quite simple. You inform your target ISA platform that you'd like to move an ISA onto their system. If you don't have an account with them already, they will ask you some onboarding questions to make sure that you're not money laundering and to verify your identity. For example, you'll need the account number of your ISA from the source account and the rough amount so that they can check that the transfer has been successfully completed. Now, the government's imposed a cap on the amount of time that this can take. A stocks and shares ISA should take no more than 30 working days to transfer, and if that doesn't happen, you can ask your ISA provider why, and if the answer is unsatisfactory, you can complain to the Financial Ombudsman Service. Another risk you take when you transfer in the form of cash is once you've sold your assets, their value rallies, and you'll miss out on that rally while you're in cash. But of course, this could work both ways. If the price of your assets falls, then you'll have avoided that loss. Now, if you transfer the assets directly, that's not a risk you have to consider. Now I'll show you the process that I went through to move my money from Nutmeg to Vanguard. Now you can see I'm logged into my Vanguard account, and the date when I start the transfer is 20th of August 2018, so we can see how long it takes. So I'm going to go to the Transfer ISA page, and I'll choose to transfer an ISA. All I need is my existing plan number, which is with Nutmeg, and my national insurance number. So I'll continue. I have to give the provider name, or just the first two letters, so that's NU for Nutmeg. There's Nutmeg. And I enter my account number, and it was a previous tax year that I'm transferring. And is it a full or partial ISA transfer? A full transfer moves all the holdings, partial just moves some of them. I'm going to go for a full transfer. And yes, it's got lots of ETFs, which aren't Vanguard ETFs. And I won't choose the funds now, I'll wait until it's cash in my account. I check the details and that's fine, so I'll click submit. And here's the step-by-step process by which the transfer happens. The next step will be that Vanguard asks Nutmeg to authorize the transfer. Then Nutmeg processes the request, Vanguard puts the money into the ISA, and then I'll be able to invest that money. And that's it. Now the transfer has started, and I'm going to time it and show you the process. The transfer starts on day 0 when I told Vanguard, which is my target ISA, that I wanted to move my money from Nutmeg. There was a hiccup on day 3 when I got a message from Nutmeg saying that Vanguard had asked for 3 lines of stock to be transferred as assets, because my Nutmeg investment pot just happened to contain 3 Vanguard funds. However, they point out that it would cost me £20 for each stock, a total of £60 to do that, and that the alternative would be to liquidate all the holdings and transfer the cash free of charge. And as you can probably guess, I chose to do it as cash. On day 4, Vanguard noticed that the hold-up had happened, and they seemed to think it was because of fees that I hadn't paid. So I informed them that it was actually because of those 3 funds and that I'd chosen to do the transfer in the form of cash. And then on day 5, Vanguard acknowledged that it was going to be an all-cash transfer. On day 10, Nutmeg acknowledged that it was a cash transfer and that it was underway. And then on day 18, the transfer was complete. So in total it took just 18 days, or 13 working days. The support was excellent from both Nutmeg and Vanguard, and the whole process was very easy. I hope you found that video useful. Many of you tell us that you do find it useful, and if you want them to continue, why not consider supporting us on Patreon? For just $5 a month, you get to take part in our live Q&A session, and you can ask me any question you like as long as it's to do with finance. And if you pay $10 or more a month, like Adrian Green and Ian Stenton, then I'll read out your name on YouTube. So thanks for listening.